In this episode, I'm going to show you guys how to trade like the big banks and professional institutions with the smart money trading system. Stay tuned. I will start to explain the strategy, but you need to know several strat money concepts, such as the order block, break of structure, and change of character. I will explain briefly about these concepts in this video. Let's start with the order blocks. Order blocks are the optimized demand and supply zones. They form when a large amount of money enters the market, resulting in massive moves. In other words, where there is an imbalance between the buyers and the sellers. We can see here from our chart that we have a sudden move to the upside. That's an imbalance. Here, sudden move to the downside, an imbalance. Sudden move to the upside, an imbalance. So these are imbalances. So let me show you how to identify order blocks. In the bullish scenario, the last bearish candlestick before the start of a heavy bullish move is identified as the order block zone. We can see the last bearish move, then followed by a heavy bullish candle can be identified as an order block. This is the first scenario, so this will be our order block. The second option is the first week bullish candle before the big move. The same concept applies to the bearish scenario. So we have two scenarios. First, after the last bearish candlestick before the heavy move, which is the first. The second one could be after the first week bullish candlestick, as we can see here, our order block. So these are the two scenarios. So this works vice versa. This example is for a bullish scenario, but vice versa too for the bearish candle. So let's discuss the concept of break of structure and change of character. Imagine a trending market with a series of higher highs and higher lows. In this case, each of the higher highs and the lows are market structure level. We can see this is how the market moves: higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then we have the higher low. So these are basic market structure moves. So the most recent higher high and higher lows are the ones we are interested in. Those are the ones we'll monitor. Breaking the latest higher high to the upside indicates that the market intends to continue to the upside, which we prefer to refer as the break of structure. This is a break of structure. On the contrary, if the market breaks the recent higher low to the downside, it indicates that the market intends to change its direction, which we refer to as a change of character. But this is the key point. Break of structure is valid even if shadow breaks above the previous structural level. This is what I mean. Break of structure is valid if we have like a weak rejection above that zone. It broke the structure. This is a candle, for example. So this is a valid break of structure if it could, even though it's the wick of a candle, it could break that structure. Is valid. So for a change of character, we certainly need a candlestick to break and close below the previous market structure. So for change of character, we actually need the candlestick to break that structure before we can assume it's a change of character. For example, if we have something like this, let's say just the wick, something like this, it's not valid. It's not valid. This is valid. This is a valid change of character. Now let's discuss the concept of smart money. These steps has two strategies. First, we analyze the market structure and point out other blocks in the higher time frames. Second, we go to the lower time frame and wait for change of character to appear and look for other block entries. For example, if we pointed our order block in the 4 hours, we look for entries in the 15 minutes. With this same concept, if the higher time frame will be on 1 hour, we look for entries in the 5 minutes. Remember that this strategy is not limited to any time frame, but your entry time frame must be at least 2 times lower than your analysis time frame. So here we first analyze the market structure from the 4 hours. So if you're analyzing your market structure from the 4 hours, you are executing the trade on the 15 minutes. If you're analyzing on the 1 hour, you're executing your trade on the 5 minutes. So let me explain step by step on a practical chart. On this 4-hour chart of the Euro Japanese, which is our higher time frame, in this process we analyze the market. In this process, we analyze the market structure and point out the most recent order block. Here we have an uptrend with the recent structure move with imbalance and break of structure. We can see our order block. This is our order block. We've identified our order block. Then we need to see a break of structure, because a break of structure indicates that that particular trend has been broken. You know, we are on a downward trend, so we need to see a break of structure so that we will know that price is getting to reverse. So we got the break of structure here. So we have an uptrend with this recent move with imbalance and break of structure. So this level is a perfect order block zone that can potentially get rejected and give us a trading opportunity. We can see here, after I broke the structure, you can find potential opportunities here. Now all what we need to do is wait for price to touch the other block zone. So in this second process, we now zoom in on the entry time frame and look for trading opportunities. In this case, we analyze the market in the 4-hour time frame. So we go to the 15 minutes. We are the 15 minutes chart on the Euro Japanese. This is our 15 minutes and 4 hours order block, but we are on the 15-minute chart. This is the 15-minute chart. You know, I told you earlier, if you are on the 4 hours, you spot opportunities in the 4 hours, then now look for entries at the 15 minutes. So we are on the 15-minute chart. So these are so I'll explain the things we need to do before we can signal an entry. In this case, you will notice that we are on a downtrend in the 15 minutes. This was a downtrend. So we need to see a change of character. I told you guys a change of character. The price must, because this is a bearish trend, so the price need to break above this structure before we can accept it as a valid change of character. So the price broke it here, so we can now prepare for an entry. But how do we enter? So this is a sign that we are no longer in a downtrend, that the market can potentially start to move to the upside. So next, we look for an order block to place our trade. So next thing to do is to look for an order block and place our trade. Now, after the change of character, prices went up. So what we need to do is to look for an order block, then wait for price to come to the order block, then take our trade. I will show you now what I mean. We had an order block here. We had an order block here. We had an order block here. So price came in here and we took our trade. So we place our order above the order block with stop loss being a couple pips below the lowest point of the zone. So now, since we entered the trade early, we need to place our stop loss below the order block that we had in the 4 hours. So that's why our stop loss was here and our entry was around here. So in this case, the first TP, we could close our position, or we could close half of our position when price gives us a 1-to-2 ratio. You understand? We don't need to be greedy. We just need to play it safe. The goal is just to be profitable. So we can close our price when we have gotten 1-to-2. So we got the 1-to-2 around here. We got the 1-to-2. A very smooth trade. But this could be our first TP. This way, even though prices get back to hit your stop loss, we will still be at break even. So for the second TP, you can target the next level of structure in front of the market in the higher time frame. So in this case, for our second TP, we can target the 4-hour level of structure. We are still on the 15 minutes. We can also track down our profits, meaning every time the market makes a higher low, we can reposition our stop loss a couple pips below the lowest candle. But that's not all. We can further look for entries as the market continues to go to the upside. Every time the market makes an order block, we could place a new order. So now, that's not all. We can still be placing order whenever the market creates an order block. The market created an order block here. Yes, the market created an order block here. So this is an entry. This is an entry. So this is just additional. Don't try this before backdating enough to gain the required confidence and experience. Also keep it in mind that whatever position side you risk for the order block, you need to risk half of the side for the following trade. Also, don't have more than 3 pairs open for the same analysis on a pair. I will give an example. If you have a small account and you are willing to risk 2% for that trade, risk 1% for the second and the third. This way, in worst case scenario, you will only lose 4% of your capital. But in the best case, you will earn far more profit. I hope you guys understood that and it wasn't confusing. Let me show you guys more examples before I proceed. If you feel kind, please go ahead and click on the like and subscribe button, since it goes a long way in supporting me making more videos like this. Thank you. So let's look at the GBP USD on the 1 hour time frame. Here we can immediately notice this impulsive move to the downside. This is the impulsive move to the downside, and with an imbalance and a break of structure. So we have our order block here. This is our order block. Now that the price has reached this level, we can now zoom to the 5 minutes to look for entries. So on the 5 minutes, here we can see that we have already made a change of character since the candle have break and close below this level. You can see the change of character. The candle have broken and closed. So we mark this recent 5 minute order block. We mark the order block and place our sell order. We took the trade when the price retraced back to here. Now notice how price made a new order block without taking our first profit. You can see price made an order block. We can enter here. So we place another one which reduce risks. So let's see what happened. We saw how the trade came out beautifully. This is a common scenario while trading the smart money strategy. Let us see another example on gold, which is a bit different from what we had earlier. Here we have an impulsive move to the downside, so we draw our order block. You can see the impulsive move, then we have our order block. Since this is on the 4-hour time frame, we then now move to the 15 minutes. We then now move to the 15 minutes to find possible short entries. In the 15 minutes time frame, we already have made a change of character. So it is time to find a new order block. You can see the change of character. So it's time to find a new order block and place short entries. But we cannot identify any order block here. So how do we place trades? In situations like this, we enter the market with retracement level. In situation like this, I use the Fibonacci tool and place the sell order precisely in the middle of 0.786 and 0.618. So we had a change of character. Then we use our Fibonacci tool to enter the trade. So we got in here. I wanted to put the Fibonacci here, but here will be kind of clumsy, so that's why it was here. If we can see, we will enter in the middle of this. So this triggered our entry from here. You can see. So this triggered the entry. We also found another opportunity as this order block formed. We can see we entered first with the Fibonacci, but another block formed, then we entered again, and you see how the trade came out beautifully well. So that's it, guys. I hope you can apply this strategy to your trading plan, but remember, no, this strategy is not enough to execute it correctly. You test it on different currency pair to find out which one works best. Also have a proper risk management plan to be safe on stormy days. Thank you for watching. If you enjoyed, please give it a thumbs up and subscribe to our channel to inspire me in making more videos like this. Also, if you have any question, feel free to comment below. I'll try my best to respond to all. See you guys in the next episode.